Markets around the world are falling and they're all being led by technology. So, with 5% plus being shed from the NASDAQ, what do we need to be looking at next? The answer is in the dark pool liquidity of Wall Street. Today, we talk about that along with the sticky shelter in the CPI. Yes, it looked like most things came in as per expectations, but if we took out the CPI shelter inflation, you would actually have a totally different scenario on your hands. Are things gone? Will we see reinflation? We'll talk about that later on. We also need to discuss the breakdowns in markets. Semiconductors have closed below their lows after rejecting a role reversal level. We've also seen the skew getting crushed recently and the S&P 500 rejecting that critical supply that we've spoken about. There's a lot of great levels coming up in today's show, so join us. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos. If you like macro, leading indicators, and of course the hottest charts, stick around. And if you like anything to do with markets in general, subscribe because we do cover them daily here. So was it a boring day like this chart would suggest? Absolutely not. It was all the way up in the futures, in the pre-action, and then it sold during the day. We know that retail, that's us, we like to trade the mornings and the big players like to trade the evenings and the close. So that brings us to Goldman's recent statement. He said that buybacks, Goldman's Rubner said the buybacks are the main pushback that I've received from the bulls, as in it's a big bull kind of synopsis. However, he will push back against that and say, according to the SEC rules, we are seeing sell-offs into the close. US corporates cannot repurchase shares in the last 10 minutes of the day. So are we seeing large transactions from big players dumping their position? Well, about 2 weeks ago, we talked about how on the Qs, that is the NASDAQ for anyone that doesn't know, we saw some of the largest trades we've seen in 2 years. And since then, we've basically sold off pretty consistently. Will we see buyers come back in? We'll bring that up very, very soon on the show. But let's talk about smart money versus dumb money. It kind of makes sense. Basically, since the breakouts recently, we've seen CTAs, so pension funds, etc., be all in terms of their positioning. They've started to chop some of those positions, and it's happening at the time of year that you would expect. We're also seeing smart money and dumb money having huge discrepancies against each other. And generally what we'll want to see is the dumb money start to purchase this dip fairly aggressively. Look out for our update over the next couple of videos and make sure to subscribe if you're interested to see when that turn does occur. We also know that for long-term investors, do we need to worry or do we need to buy right now? We're probably trading at around 19 to 19.1 times forward PE. Is that cheap? Not really. It's almost a standard deviation away from really cheap price. So you do need to remember that sometimes being patient and waiting for the right zones can work out for you. The results are in for the sentiment surveys moving forward, and you can see that most people are still ultra bullish. I had a guess here with my private community. I thought it would be 42%. It was 44.7 on the bull side, slightly up on the bears. And what we're looking for, if you're a bull buyer here, is actually for the bears to start taking over. We want kind of like a 30% plus reading. Maybe we'll get that next week if we continue to see selling. Do remember, there are certain times of the year that are weak. And we've talked about this many times on this channel, so we'll just jump over these figures. For the months of August, September, into the middle of October, pre-election years can be weak. By the end of the year, though, in all of the cases where we've had bullish first 6 months, we've been bullish by the end of the year. So an investor maybe doesn't need to be as concerned about these markets. What about volatility? Well, we expect that to continuously go up. This is about a week to 2 weeks old, that chart, but volatility has been going up, although it's suppressed by the nature of zero DTEs. And in the last 10 pre-election years, which we're about here right now, we tend to see selling into the end of the month. Will it be the same? This is going to be basically the $1 million question that we have to ask ourselves. So let's take a look at some unusual volumes that were coming through over the last 24 hours. First up, the S&P 500. We saw some big clusters at these lows. Basically, there are buyers, and they're fairly large, that seem to be coming in right on these lows for the S&P. This is a defended area. If it gets taken out of the Friday trade, we're most likely going to move to much lower points that we'll talk about later on in today's show as we look at the charts. We also saw a similar thing happening with the Qs. Just like before when we were up at the top, we saw monster trades. At the end of the close, we actually did get some larger trades coming in from bigger players. Now, are they sells getting ready for a big sell-off, or are they buys? We don't know yet, but certainly we'll be looking for the evidence on the smaller timeframe charts to bring along with this big dark pool volume. And they were dark pool trades. That means they were basically trades between two large entities. It wasn't just in the normal market with normal transactions. We also know that Treasuries found some potential buyers near the close as well after pulling back, and we've got 3 monster trades that happened only a few days ago. So Treasury is starting to look a little bit better after the pullback of the last 24 hours. So what do we bring ourselves to? Well, we know that it's still about earnings as well over the next couple of weeks. We still have some big ones to come, Nvidia and other large stocks coming through. But predominantly, we're seeing like 85% of the S&P 500 has reported, which means that we are now allowed to see price action really take hold. If these markets want to sell, they're most likely moving to what we call mean reversion and the 20 moving average. But do remember, options is going to become the focus of next week. Why, you might ask? Well, it's OPEX time again. Yes, the third week is coming for us. And what that means is that we're going to see trillions of dollars of expiration, and we bring you some amazing stats of what tends to happen around August. And of course, around the first week coming into it on the weekend into the week after. Do we see weakness around this period based on OPEX itself? Well, other than that, let's take a look at some of the large trade transactions in the last 24 hours. And it was, again, certain stocks doing pretty interesting numbers. J&J continues to outperform with huge amounts of options trades. We also saw a large amount of trades starting to come through on things like Disney, although it doesn't show on this chart. And actually it does here. It's here, 4.44, my bad. I did know it was there. And that actually went up 4.9%, a change of trend on the small timeframes we'll look at later. And other than that, I guess it was just more kind of normalities, couple of stocks that were in earnings. But take a look at this. We continue to see 54% calls, 46% puts with 43 million units. So this is huge. This is way bigger than normal. We had a couple of days of weakness at the start of this week that weren't very big. They were like 37, 36. Now we're seeing 43, but still so many calls. So retail's been buying the dip. We already know Bank of America told us that, and they were the ones, well, we were the ones putting in the flows over the last week. Let's now jump over to the charts and have a look at all the most important things. We'll start here today with some of the key bits of overtone notes in terms of which markets could be moving based on these indicators. Then we'll jump into the indices and the individual stocks. But let's discuss here US 2-year. It's in the middle of the zone. That was a CPI fizzer. Nothing much happened, though the markets still were volatile. We didn't break 5.1. We didn't break 4.6. So remember, set your alerts. Keep those on the charts. That will move quite a lot of stuff. Treasuries did fall off those quite substantially. And if you actually take a low to a high swing, you'll notice we get to a 61.8 fib. It could be that Treasuries find some buy support in the next session. If it's going to happen, it happens in this little block here. If it does take a new low, I would say we're going for $90 and a new low, maybe even 88 for Treasuries. So remember, there's a lot at stake here. Big zone for it over the next coming sessions. And Treasuries is back to where we've seen some buying support, as we mentioned before. Consumer discretionary versus staples, we've got really no movement here. So not too much rotation over the last 24 hours from that aspect. But this is the big one, semiconductors, the best market sector in the US, and it's fallen again, and it's put in a double top like we discussed, with large trades going through up in these areas. So does this mean that we're falling back to at least 142? It seems likely, although the trades that could go through before this happens might be a little bit sneaky. We also have now the opening of going back to maybe even a 130 kind of handle here for semiconductors. And the best sector showing weakness like this usually means a rotation out of technology is occurring, which is very common at this time of year. And that's why we usually see that sell-off in August and September, just like most other times of the market, just like, February, those types of periods of weakness. Copper did fall off. It looks like it wants to put pressure on this previous demand. If that happens, we've got demand destruction across the board. And with core retail sales coming out next week as well, that's going to be an interesting number because it looks like demand destruction is fully in play, at least according to copper. What about central bank liquidity? It's been just kind of hovering around. Not too much to note here from the central bank liquidity standpoint. Here's the S&P 500 versus where it is. If we did fall off to 4,000, wow, that would be a buy zone from a technical perspective. And the reason why is quite simple. We would have a very good level that we already know is heavily traded. Plus, we would be getting back in line with our central bank liquidity, which we've been using for a very, very long time. Of course, we've seen when we move too far ahead of this or below, we tend to go and play catch up both ways. Let's have a look at oil. It did still hold its highs, although it sold off during the session. We're looking at how this closes from a weekly perspective. Once we get that, we should know that pullbacks should be met by bull demand if they hold above these areas. And it's a very important 24 hours here for oil. The next stop would be $90 to $92 a barrel. So we might have to be a little bit careful about where we're driving if we want to be not paying too much more on the gas at the pump, because it could be going up a little bit more should that break through. Dollar index stays within range. Bit disappointing here. I would have liked to have seen it go out of range. We knew that this was the key level. We also knew this was the key level, and it was a fizzer. It went down and went up, and there was very little action that we could take advantage of unless you bought the dip and you bought that as demand. If you did, well done. Small time frames might have been pretty good. In fact, let's have a look together to see whether there was one. Yeah, there was a decent little trade in there, and the action would have been after this. You could have basically bought that dip there. That would have been fairly replicatable. This would have also been a good action, and profit targeting, I would have looked for that. I wouldn't have gone to where it ended up being. So nice little 3-to-1 style trade that was there. Fairly replicatable. If you like those types of trades and you want to get involved in those things, do our day trading masterclass. Of course, you can always check it out. Links in the description down below. It's a very replicatable style strategy. Let's move over to gold and take a look at this one. Now, gold has been lackluster. And we'll take a look at Barrick in a minute because I think I like the stocks more than I like the metal at the moment. But yeah, look at that big rejection. Now, theoretically, gold should have done okay if yields did drop. The problem is yields actually came back after being negative initially. So they did see a bump. We saw a bump in gold, then we saw a weakness, and it kind of closed down near the lows. Now, you do need to defend these levels. So we need to defend, if we're a gold bull, we want to defend 1890. But take a look at GDX and Barrick. So if we have a look at GDX, which is Vanek Gold Miners, you can see that already swung the low earlier this week. We're looking for that to get above 2980. That's going to be a big deal for it. And that's going to be, I think, a decent bullish sign on the charts from a statistical standpoint. If we move over to gold overall in terms of Barrick, you can see here another rejection off the lows. And that's showing us that there's good potential here for continued relief rallies in the gold stocks, which have been beaten down well, like a lot more than gold itself. Let's move over to Tesla, which is everyone's favorite here. A lot of you guys like this one. Of course, if it falls through 240, as we mentioned, we could be moving back to 210, 200. And I've put a big green box down here because I think that's probably the next level where investors will get very excited about this zone. I'm sure a lot of you are like, yeah, of course I'm excited about that. But remember, it's much harder to pull the trigger when things come down if you've already bought in between. There's very little things holding it up here should we get through 240. So 240 structure, we're watching at the moment. Buyers are still trying to buy that Tesla dip. I'll see if there's any unusual trade volume that's been going through that stock as well. Let's mark out NVIDIA. From the top to the sell-off is now sitting at 13% almost. This is a fairly big deal. It's a decent amount of sell-off. I've still said 400 is the big key here. I want to take 400, and that could mark actually the beginning of the kind of pullback here for NVIDIA, a significant one at that. So we'll continue to watch it. Another one that I've been kind of hating on for a while on the channel, if you've been watching for a little bit, has been AVGO. And I can tell you I'm being proven relatively correct here. Of course, this is my level where I thought it would short. It goes back up, tests into this high. That's very possible. But if you remember, I said over the next 3 to 6 months from this point here, I expected it to weaken. So we'll see how it works. But at this stage, yeah, it looks like Broadcom is pulling back. And if semis pull back across the board over the broad term, that's going to be very weak for, of course, the overall markets, as so much of the market is technology in the US. Other markets around the world might do better, but the US could suffer from this perspective. Let's move over to TAN, solar. Looks like it's starting to form base. Good. Big trade there the other day. We'll continue to watch it. But this is the surprise one in some ways, though we did talk about it the last 24 hours. It looks like Disney's plan is kind of like sell assets and potentially also the old AAPL in the background kind of thing, maybe purchase. This is an interesting rumor. We did see a switch of trend where we basically took out the supply, and that means that pullbacks at this stage could be met by buy demand. I like the idea that Disney pulls back here or even rallies back through 94, then pulls back. And I think there could be a good trade here moving forward from the stats perspective if we're looking at this objectively moving forward. So Disney shows signs of life the first time since we got the island reversal here where we saw that nice little momentum trade. This is a bit of a switch, bit of an interesting point. Speaking of switches, CQQQ, very boring. Chinese market has only negativity on it. I've seen some of your comments. Everybody's like, I don't want to go in that market. Yeah, fair enough. However, it does look good on the charts, and a chart is a chart. And we're really just thinking that at some point there's going to be stimulation of the economies. We do know that, of course, Baba has put in its report. It looks pretty good on the charts. Most of you would know that this looks like an inverse head and shoulders. So yeah, it kind of looks like an accumulation base, big demand. It might be slower, it might be different, but to think where it's coming from, Baba was once $320. I don't think it ever gets back there. Well, never say never, I guess, but yeah, I don't think it's going back there. But down here in these bases, JD, Baba, CQQQ, KWeb, all these types of things do look like they're looking for that government stimulation. For the Australian markets, it's holding itself thanks to energy, banks, and mostly semi-inflation plays. But yeah, it's stuck within a zone. We already know 7,500 to 7,600 has been where selling has occurred. We know we've got a little double top on the small time frames here, and we have absolutely, it's almost one of the most boring trades, like watching paint dry this thing at the moment. Look how slow it's been. Imagine if that was the American market, you guys would be bored. That is it's terrible. But anyway, it's come back up. It's getting towards 73, 72. There could be some sellers somewhere in here. And yeah, double top at this stage in that market until broken out. The German market continues to flail around, obviously failing at this supply similar to the US that we'll look at in a moment with the indices. Let's take a look at the 2 hour together. And you'll notice that it did get into this area. Now, I'm not sure if this will count as a change of trend towards the buy side. The reason is that is a block. It did slightly take the high, but it's so minuscule. If markets come down, I could see something like a 15,850, which is around there, possibly being a short-term time frame kind of buy zone for a scalper or a day trader. But in general, this market is still looking short over the bigger landscape of things. US 2000, this is the story of all the indices. They all came up, they all hit supplies, they all went right back down. And the US 2000 actually went all the way down and closed below. Now, we know there were some big trades, so let's talk about that right now. US 2000 looks like it wants to go back to 1900, if not possibly even lower. So the Russell is weak. Qs fell down, didn't close below the low though. They did find some buying a little bit there near the end. And then of course we have NASDAQ itself. Look at what that looks like. Big rejection candle. Let's take a look at the 2 hour chart here. And these were trades within the session. Basically, you could see there was supplies. They keep getting hit. As we've been talking about, we've got lower lows and lower highs and lower lows and the same highs and lower lows. So it's still trend is weak for now. But because of those decent trades we've seen go through, if we take out, I think specifically the S&P 500 wick high, but also the NASDAQ one, which sits around 15,362, I think that if we close above that, we could be looking at dip buys really commencing back up into these areas that I've marked up here, 15,600 plus. At the moment, I'd say the trend is still down based on semis, based on everything else we've seen. S&P 500 here. But remember we mentioned OPEX as well. When we bring the data stats together and we know that OPEX can be that volatile week that is all about options and all about trillions of dollars of expiration and manipulation, all bets are off. There could be some big trades. Firstly, I think we should go for the gap fill. 44.40 seems quite likely. The other thing is 4,400 and swinging this low. I'd like to see at least sell-offs push down into there. And what we've always been talking about here for pretty much a month and a half straight, has been discussing this concept of this mean reversion, and that most good bull trends, even if they are real bull trends, real bull recoveries, will get back to at least this area. Well, that's still far away. We're still talking about 3-4% away, which would be in line with a pretty normal statistical kind of sell. So this zone here, very interesting, looking for the market to find further weakness. But if it takes out that day close, oh, that's going to be a big deal. For the market here, it's 45.30. If we look at the futures and we take a look here at the futures market, you can see how it traded. Look at this. I'll put this little arrow on it. It came back into this zone, back into the supply that we've been talking about, and then just goes bang, straight back down. New low formed. So again, weakness is here until proven otherwise. We'll update you on all of those things. Over to the crypto market, nothing is going on. No break above 30,450, no break below the low. We're stuck coiling. Expect a large move when it does break out though. We'll update you if that occurs. And let's talk about what's moving forward. So we've got core PPI 1 hour before the market comes open. And then next week, we have quite a lot of information. We've got core retail sales. That could be a big one here, showing demand destruction, 8:30 a.m. New York time. And then we keep scrolling through. We get the FOMC meeting minutes on Wednesday, which is at 2 p.m. New York time. And then, of course, we have unemployment claims. But really, it's not that one. It's going to be the OPEX, the big options expiration, and everything's around that. So stay tuned for our weekend video where we bring you the stats on what happens next. Bye for now.